Yes, sir. You already know it's your boy B Hayes. We back with another one, guys. We're going to jump right into it. Before we do that, let's give this video a thumbs up. So, Express, ticker symbol EXPR. We know this is a simply play to AMC. This is a play we been put the channel in on way back when it was trading at around $2.50, $3 per share, guys. We got in, sold at around $7 plus, and then we rinsed and repeat. We got back in on the dip when it was trading at around the $5 range, and then it done ran all the way up to $7 plus, guys, almost hitting about $8, and then coming back down to where it's currently trading at $6.50 after reporting earnings and beating expectations. And we already know once the companies report earnings, whether they beat expectations or not, typically the stock tends to pull back, guys. And I was in this play. I was up huge on yesterday, about $1,700 on my position. If I knew what I knew then, if I knew what was going to happen, on today, or if I knew what was going to happen, basically what I'm saying is I would have sold my position on yesterday. And I know some of you did. Some people commented and said they're getting out of the Express and they're about to rinse and repeat. Congratulations to the ones that did. Great job on that. But I don't feel it's over just yet. I feel this still got a lot of more running to do. It's just, that came in, put a hiccup in what we had going on with the earnings being reported and stuff, because whether it beat expectations or not, the stock typically love to pull back. And you probably say, well, B Hayes, if you know this, why didn't you sell your position? Well, yesterday was a bit different. As we know, AMC has been consolidating in between that $30 and $40. Couldn't break through that $40 wall for the past 5-6 weeks, guys. And yesterday we broke through that 40 wall, and then we thought it was going to be the next day over, a couple days before we break through that 43 wall. But we did it all in the same day. It was a nice spike up, guys, and that just caused me to believe that it was game time. It was on, guys. Even though I stated in the AMC video, let's not get ahead of ourselves. Continue to take this thing one day at a time, and pat ourselves on the back for that green day, but know that it's going to be a red day. We need to be happy on the red days as much as we happy on the green days as well. So we pretty much was well aware what could possibly happen after earnings, but for the momentum, the hype, and whatever, like all the adrenaline that was going on yesterday, I was like, I'm going to hold my shares, because I feel, Express was moving very, very good. It wasn't even making no support levels. It was just staircasing its way up, guys. So the pattern and the charts was looking lovely for Express, and it still is. But of course, earnings came and knocked us back a few steps. But like I said, if I could go back, I would have sold, rinsed, and repeated, got back in today. Would it not just yet, but in the morning as it pulled back. If it want to pull back to around 620 or maybe the high $5 range, I start accumulating my shares again, and I would have rolled it right back up. So let's go ahead and take a look at this. What's going on with Express shares today? Express traded higher in the pre-market, but is now trading lower on Wednesday after the company announced better than expected second quarter financial results. The stock also traded higher Tuesday amid momentum in the Reddit stocks led by GameStop, AMC Entertainment. Express reported quarterly adjusted earnings of 2 cents per share, which beat the estimate for a loss of 30 cents per share. The company reported quarterly revenue of $458 million, which beat the estimate of $447.9 million. Express said it expects to net revenue to be above 2019 levels on a comparable basis in the second half of the year. The company also said it's on track to achieve its goal of $1 billion in e-commerce demand by 2024. Our performance across all channels in the second quarter was very strong on both the top and bottom line. We experienced an inflection point after the 4th of July and have been driving a double-digit comp versus 2019 since that time, said Tim Baxter, CEO of Express. So guys, Express beat estimates way better than expected, guys. And also their revenue was expected to have 447 million, but they ended up having 458 million, guys. An extra $11 million better than expected, guys. So even though some may say how earnings was better than expected and the price falls back, because it just be the anticipation, everybody already knew when earnings was going to happen. So all that previous run up, the stock typically likes to run up in anticipation of earnings, already putting the price in. So then once it pulled back, whether it reports good or bad earnings, the price is already kind of, already overextended. So basically putting it right back where it really belongs at, if that makes sense, guys. And that's just typically how the market just works. It's two ways you can look at it. Also, from people, already thinking like, just reverse psychology. The market is a psychology thing, guys. So you already know. That's all we really got for this video. We just want to put y'all on game with Express, let you guys know what's going on with that, because we know that's a play that we still in, and your boy's still holding his position. I got about $4,500 in it, market value 54, got 834 shares, up over $888, about $900. And the days, just off the day, we lost $600 off that position because of the earnings being reported and it pulling back the way it did. So that's all we got for this video, guys. If you like these type of updates, these type of predictions, all that good stuff, consider joining the family. We post content like this every day, guys. Add your boy on Instagram. Don't forget to get your free stock in the description down below. I love y'all. We out, and God bless you.
Yeah.